We are live. Welcome to the Investing with the Boys podcast. I got myself, Stock Savvy Shay. We got Logical Thesis. What a week it's been. I feel like we're not even we are 2 weeks into the new year, and it just feels more has happened than all of November and December of last month. But before we get into how are you doing, Logical? You're on mute, buddy.
Sorry. Give me 1 second. I want to send this out. Yeah, so oopsies. So, I think that this week was really good. I think that, the last 2 weeks have been really good if you've been a market participant. Um, the S&P has kind of gone nowhere. I think the story is the broadening, which is really good for us
Yeah.
stock pickers. I love to see it. You know me. I mean, I don't want to say I'm a big IWM guy because the IWM is a losing index, but damn, look at that thing go. I saw 280 calls come in today. What's IWM? Did it hit new all-time highs today? I
Let's
think
see.
it did. I think it did. Let me see. Damn it. The way I have this set up is not good. Yeah. We hit new all-time highs today on the IWM. So it's always great to see. I'm just happy. I'm a happy camper. RSP was green yesterday while S&P and the Qs were red. You got to pay attention to like these subtleties, right? Like I think that's what's really important this year is that the tech trade has been really strong and now it's just kind of taking a little bit of a breather. I don't think it's like the end of the tech trade. That would be so silly, especially after we got those TSM numbers. TSM had a positive reaction. What's that stock up? 345. Oh goodness, dude! Yesterday I saw somebody sell like $30 million of puts on TSM in the money when it was trading at 327 for the 330s, and I'm like, I kind of feel like at 330, I should probably at $30 million of flow, I should probably just follow this flow. I didn't because I just hate selling puts. I get scared, but I'm not surprised to see TSM up today. I thought it was a great report. I'll let you, when I pass it back to you, you can talk a little bit more TSM. But yeah, I mean, that's the story this year is tech is lagging. Everything else is working. The small caps are working. The mid caps are working. I cover bios. We had JP Morgan Healthcare Conference this week. It was a really, really quiet week on the bio front. We all expected more buyouts, et cetera, but we didn't quite get them. So just being patient on that side of things. But other than that, man, I mean, running a fairly diversified portfolio, having, a good mix of small, mid, large caps, I think this year is like being, pretty constructive. It's kind of what everyone's been waiting for a long time. You can't get those bears anymore saying, well, it's just 7 stocks holding up the market. It's like, well, dude, that's not going to play anymore. I mean, we're seeing the breadth expand. So anyways, I'll pass it to you. Get your thoughts on the market, what you're thinking.
Yeah, I mean, the breadth is definitely widening. I think big tech has been overwhelmingly the biggest winners the past couple of years. So I think that it's very healthy for the longevity of this bull market to kind of go into other pockets. I think we started seeing signs of that last summer, that breadth widening, and it's continuing this year. But going on TSMC's earnings, I think that is just going to nail the coffin of every single AI bear of just like the bubble is not forming anytime soon. And I think that it's really important to realize what TSM is to the AI economy. Like they are the AI factory. Like when you talk about NVIDIA, they rely on TSM. It's like they are I want to say the parent of the AI cycle where they do everything, but they're underappreciated. Because I think that's actually more ASML than TSMC. But I do believe that TSM is just they own the physical bottleneck that's happening in the AI economy. So when you see the numbers they're reporting on their earnings report, like I think it was $34 billion came in year over year. They easily beat expectations. I think the most important detail for me was the margin expansion that happened at the same time as them expanding internationally. Because that was my biggest fear when I was talking to journalists leading up to this print was they have a monopoly and pricing power. I don't know if they're going to flex it as much as they should to offset the headwind of that international expansion. Clearly, we saw that they did because gross margins reached 62%, beat 61%, I think was the guide. But the operating margins hit 54%. Net income beat by $1 billion. Like it just tells me that the TSMC factories are just running at at utilization levels high enough to just really expand on those margins. And that's really important. That's really, margins are the biggest tell on when the cycle might turn. If it continues expanding the way it has been, it's just really difficult to get bearish in this AI cycle. And I think that that's part A. Part B is TSMC is notoriously known as the Debbie Downers of the semiconductor trade. What I mean by that is they are responsible adults where they are very cautious. They don't overpromise. They don't get too greedy. Don't push their foot on the gas pedal in order for their own self, like to make a couple extra dollars in the bottom line that might erode that this AI cycle trade might turn into a bubble. Like they're probably the most important player in the ecosystem that's making sure that this is actually not turning into a bubble because they're growing responsibly. And I think that their order book, their customer commitments, and like their internal capacity planning are all pointing to the same direction right now, which is telling me that the demand for leading edge chips are still growing way faster than supply. And you also heard commentary on the conference call that when the demand and supply start like meeting each other, it's probably going to happen by 2028, 2029 is what he said on the conference call. So this is the most conservative player in the ecosystem, the AI factory, telling you that this demand and supply imbalance is going to last another 2 to 3 years. Nowhere anytime in 2026. So I think that is a massive, massive moment for this AI cycle bubble talk because it got loud, as you're fully aware. I mean, the bond market was kind of screaming at Oracle. A lot of the Sam Altman all of a sudden went from AI innovator to poison pill of the ecosystem. You started seeing negative capex headlines about Meta, Oracle, even Microsoft. I just think that combined with like you have some renowned like figures like Michael Burry trying to call the AI bubble, like it's creating this massive spotlight on the space that didn't exist a year ago. So this was a very important print to show everyone how early we are in the largest industrial build out in modern history. And I think that people need to stop. Like Michael Burry got the real estate market, absolutely nailed that correctly. A lot of people predicted the real estate markets was going to crash, but they were way off on timing and they got busted out of their positions. But Michael Burry didn't. He had the not luck of the draw because like he almost got busted out, but like his timing was more fortunate than the others. But it's too early to call an AI bubble bursting, especially after that earnings call, because I think the true bottleneck right now is wafer supply. And I think that single statement that he was saying on the conference call about the 2028, 2029 supply demand is when it's going to really happen. And also when he provided commentary that he didn't just talk to his customers, he talked to the customers of his customers to figure out if the power, cooling, racks, data center, real estate, all of this, like, is this real demand or is this artificially inflated from these large hyperscalers just spending? And his answer was, it is. It's very real. And that's why I kind of talk about that this is the next phase of the AI cycle is actually going to be more allocation driven rather than a demand driven one. Because once supply becomes a constraint, which like it's going to continue, the economics continue to change because instead of competing on price, I think a lot of these customers are going to start competing for access, and the company that controls the scarce input gets to determine how value is distributed across the ecosystem. I think NVIDIA is a bigger client for TSMC than Apple is. Like is a wild statement to say if you know what the situation was like 5 years ago. And I think that everything I got in that conference call was just so bullish. Like the only weak part, if I want to be like an even argument, was I think I'm looking. Let me see my notes over here. I think that they had some margin compression issue. Like if I had to poke a hole in something, it's that overseas fabs might dilute the gross margins, which I talked about earlier on this rant I'm on, a few points as they ramp up. And N2 ramp will also dilute gross margin by 3% this year. Sure, that's fine. That's literally the near term headwind, but they just guided for 64% gross margins in Q1 versus 60% anticipated, and the operating margins coming at 55% when everyone thought it was 50%. So like the demand is exceeding that gross margin headwind by like a substantial mark. So like I think that this is the biggest tell to me, breadcrumbs, that the AI cycle trades very strong. And I think that's probably why you're seeing a lot of the AMD, the semiconductor space with the chip warriors start ramping up this year, because this is like a big earnings sprint. I don't know. What are your thoughts on this, Logical?
Yeah, I mean, I think it's kind of crazy that just a couple years ago you could have bought this thing at $80, and it's like one of the largest companies in the world, and it's now 4x from that, and it's even 5x from the lows of 60s. I didn't nail any of the 60s. I actually bought some of this thing at 80, and I think I sold it at 100 because I'm just dumb. But it is what it is. Crazy. I mean, just looking at this thing.
There are some catch-up trades for. I know you're like more of a re-rating trade. Like the low margin data center plays, like they got beaten down in Q4 of last year. So like if this AI cycle is like continuing, I don't know. There is some opportunity for like a near-term re-rating.
Actually, speaking of that, today I did take a position in one of these names. I am back in Galaxy Digital as of today. They got
tell us the thesis on that.
Well, today they just got approved for another 800 megawatts from ERCOT. So now they have a total of 1.6 terawatts of energy, and 800 of it, the prior 800 was already essentially in contract with CoreWeave. So now they have another 800 megawatts that is up for some sort of contract. So I think Galaxy Digital is going to be great, and it's going to be riding the crypto tailwinds, and we're seeing kind of Bitcoin catch a bid and Ethereum catch a bid. So it'll be really nice. I think, yeah. So Galaxy Digital, if you don't know about it, I've talked about it a few times on these streams, but they were a crypto forward business. They have like what's like an exchange, essentially, Galaxy Digital Exchange. But they've been kind of getting more over into the data center space. So they're kind of comparable to like an IREN or CIFR, if you want to think about it. I don't know the exact differences between all of these different companies. But Galaxy definitely, I thought that was a really big headline. I thought that the move was really under appreciated in the morning, and I turned out to be right. Like I saw it and it was only up like 5%, and I'm like, okay, this is like the catalyst every bull has been waiting for. And lo and behold, I got in at around actually at exactly $30 to the penny, and now it's at 32.16. It's up 14% on the day. When you just follow stories long enough, you kind of know what you're looking for. And in this case, I was waiting for that, and I felt like it was really underappreciated. Now, look, the market cap on it is kind of big, but they actually have a real business with the exchange. And if the crypto stuff starts getting going, then again, like you said, right? If you believe in high beta, the re-rating play in some of these data center names, then not owning these large caps and owning some of these smaller mid caps, that's exactly where the alpha is going to be. So I do think that this was a great catalyst for them. I think it really opens the door. It's what the bulls have been pounding the table on. So yeah, to me it was a clear entry. Even if I didn't,
software is just up 3% in the last 5 minutes. Something just dropped. Okay,
please find that. You are our local tech person, so just
MongoDB just went up 3%. Rubrik went 3%.
It's so funny. I'm actually happy to see that. You know why? Yesterday I saw $2 million of MongoDB puts, and I followed them, and I cashed out yesterday for a quick trade. And then I saw it end of the day at 386, and I'm like, damn it, I should have been more patient. But now that it bounced, I'm feeling a lot better. So good to know.
What's the head? No, I mean, look at their candle, like their last 5-minute candle. Logical. If you want to share your chart,
wait, hold on. It's so funny to me that you're saying a 5-minute candle, because you always make fun of me for being so.
No.
I've never pulled up the 5-minute candle.
No. When I want to see, like, there was a 3% move all of a sudden, so I want to see if I was like backed by like what kind of volume.
Is it just MongoDB? Because I see GitLab is still really down for the day.
No, it's just Mongo. So, and also Rubrik caught a bid, but.
Interesting.
What is the Mongo news? That's so interesting.
Because Mongo is really light, though, dude. I don't know. I'm not really thinking too hard about it. Here, let me see what you're saying.
Because I do think software is the arena on this AI trade to find some opportunity. Because everyone's getting lumped into the same bucket in software. It's just everyone's being very lazy. That's just how it is. Usually, when there's like a massive narrative change, doesn't matter what kind of niche you operate in. Like AI security is a perfect example. Like, why in the why is CrowdStrike, Rubrik, Zscaler, all of these AI security, Cloudflare being lumped into the Monday.coms, Adobe, ServiceNow? Like when AI agents is going to increase the amount of data and increase the amount of digital products get released, what do you have to do with that data? You have to protect it. It's going to be a massive tailwind, but they're getting re-rated along with the other buckets. Like that's why I'm talking about the irrationality of it. But Mongo is interesting right now.
I know you don't
I find it.
use. I know you actually. I know you use AV. What is it called? VWAPs or whatever. And if you
Yeah, yeah.
anchor it to the IPO on Rubrik, apparently it's sitting right on it. So that's pretty interesting.
That's exact. That's why I added it this week. 100. That's been
Uh,
my ad level, but it hasn't moved off that level because like I
yeah.
added. When was the last time? I added in
Mhm.
November, and it's been hugging on that level.
I mean, it looks like it also touched it in November and bounced, but the problem is that it bounced and then it came right back to it. So for me, I'm kind of like, I don't like when something comes and retests it again so quickly, but I don't know. I have a
There's a volume shelf there though at $70 too. Like it's interesting the consolidation.
Yeah, no, I hear you. So I think, look, you have a pretty good, head for some of this, software stuff, and just you got to have a take at some point of like, I don't think all of these software stocks are the same, and some of them are trading at really reasonable valuations. So I think you got to make the call, man. I think Rubrik makes a ton of sense. Zscaler, anything in cybersecurity that makes sense. I don't think that's going anywhere. GitLab, I know everybody's pounding the table. It's so cheap. That might be true. I think
It's
it's
gonna get
bad,
bought.
but
That's the only thing. Yeah.
I mean, but that's the story with all of them, right? Aren't they all cheap enough to get bought at this point? But none of them are getting bought. Like Bill Holdings was one that they said had a lot of flow, thinking it was going to get bought, and it still hasn't. I like Braze Software, but that continues to make new lows. Oh my goodness, that thing's at $26. Holy
Well,
moly!
it's different though. Those are CRMs. Like this is like DevOps. It's technically like there is some code development that could be intriguing on GitLab. You shared a report with me actually recently. Like Anthropic, the reason cloud is like disrupting. Cloud is the reason why software is like struggling in 2026 because what they just communicated was a ChatGPT moments, like the second derivative of AI agents. Like it's from what I'm hearing from like Daniel as well, my at Futurum, it's a game changer. Like it's actually like the biggest jump in what an AI agent can actually do for your organization. And I think this is why a lot of these CRMs, these DevOps tools, are just getting punished because they see like they're all transitioning from seat-based licensing to some kind of usage, and like they're all trying to adjust to what the new AI economy is going to become. But that's not you're not going to see any of those like bumps in the fundamentals anytime soon. And I think that's you're seeing like Atlassian like is a solid DevOps tool. They're getting punished. They have healthy margins, poor SBs, stock based compensation. You're seeing Monday is dirt cheap. Like I don't know what let me look at the fundamentals of Monday now. It's kind of crazy how cheap it is. ServiceNow is a large chip, blue chip SaaS company that has very healthy margins, Rule 40 score 50 plus for I don't even know how many quarters. They are trading at 26 times free cash flow now. That is near their decade long low. And what I'm going about this is when software is looking more and more like a commodity, like it's looking more and more like a basic input into what an organizational structure is going to look like. Going from 40 times free cash flow, if you have a Rule 40 score 50 plus, is now getting re-rated to 25 times. And that's what you're seeing right now across the board in the space. And I think that GitLab specifically, in that report you showed me, I don't know if you dug into it too much, Logical. Anthropic is using GitLab significantly in that in their whole cloud. So like I'm wondering if that's an interesting play. But again, like Google is a massive shareholder in GitLab. They cannot compete again against Microsoft's offering. Like Microsoft owns the enterprise space. Like there's a duopoly, but it's like it's like a duopoly comparing Tesla with Rivian in a way, where it's just like that's a bad example. Rivian's actually better. Lucid, Lucid and Tesla, where just like it's got an offering, but like they're not seeing any kind of reacceleration. I think that's what's really important to see the reacceleration. I think net revenue NRR is really good. ARR is really good. Like the reason MongoDB is like the best performer software company in the past couple months is because they've shown proof in the pudding that their Atlas, which is their cloud offering, database offering, has reaccelerated their NRR for 3 straight quarters. That's like, all right, there's proof that you're seeing a tailwind from AI. A lot of these players, it's been a gradual decline. I mean, Rubrik, for example, I think this is totally overstated because I think that it's a lot of large numbers, but like ARR growth. A year ago, it was at 38%. Now they're trending lower to 34%. 2 years ago, it was at 114%. Then it was at 58%. Then it was 38%. Now 34%. So I think there is some real fear of that deceleration that's happening in ARR. I just think it's overstated in some of these names. Like it's just a lot of large numbers. Like if you're growing at 50% ARR, like you really, unless you're NVIDIA and Palantir, which they own their respective stages of AI, like you're going to see a deceleration. But like for GitLab,
I think on a point on that though, like I think when it comes to NVIDIA or maybe Palantir or some of these other names or like Micron, for example, the demand is outweighing the supply. And so in that sense, of course, their revenue is accelerating to like higher and higher because they can't sell enough of their product. Like there's just too much demand. When it comes to Rubrik, it's a solid business that's growing at a very fast clip, but it's just a solid business. It's not like people are falling over themselves to get NVIDIA chips because that's clearly like a race right now.
Well, I hear you on that, but that's the reason why Palantir is trading at 200 times free cash flow. I think
I agree.
So
yeah,
I think
that's what I'm saying.
Let's see for GitLab. I'm looking at their fundamentals right now. Oh, 30 times free cash flow. Damn. It's actually not. If ServiceNow is trading at 26 times with a rule of 40 score of like 50 plus, GitLab trading at 30 times. That doesn't scream to me undervalued, even though the price action looks like dirt cheap. I don't know. Like they're expected for 2026 to grow at 19% top line with 22% free cash flow margin. So like qualify for the rule of 40 score. But I don't know. ServiceNow is trading at rule of 40 score for next year is 19 plus 30, 53. It's elite. It's just, I think there is. Okay, so that's part A. Part B is I also think that if these software names are going to actually become major winners in the AI economy, they're going to have to be have a compute angle to them because compute is literally the oil for the new AI. For this industrial revolution, compute is the oil. So in order for you to you can't just be a software company anymore with 85% gross margins plus. Like you need to have some kind of compute angle to provide compute to your customers. That's going to be a massive margin deceleration. I think that's kind of maybe what the market's pricing in right now, where if they are going to be a winner, it's not going to come at an 80% gross margin anymore, which has always been the software comp was 80%. It might be 60%. And I think that's totally fine. I'm totally happy with that. If that's the case, if they can maintain growing at 25+%. But I think there is just again, it's just so noisy. And I think that this is something that I talked about in 2024, and I think we talked about in the beginning of the podcast when we started this a year ago as well, Logical, where the AI tsunami, that's the phrase I always reference, it's coming for the whole space. There's going to be a handful of winners. I said Palantir, clearest stage winner. It's operational. It's creating data and doing the work for you. That's like a no-brainer. Like doesn't matter which LLM wins in the race, you need to use Palantir in order to actually decide what to do with that information. For example, if let's just say Abercrombie had a really bad earnings report. I don't know if you saw that, but Abercrombie had a really bad earnings report. If I'm working at Abercrombie, I'm like, all right, what's driving the poor sales in Abercrombie? If you had Palantir inside your system, you can literally, it tells you, all right, maybe nobody's buying these like specific kind of jeans on this specific kind of day. So that's a bad example, I guess. But let's just say, yeah, fine. Let's just maintain the example. Nobody's buying these kind of denim jeans at this specific kind of location in the specific region of the nation. So now it tells you, all right, do a marketing campaign for this specific region that targets that specific product so you can increase the demand for that product. That's what it literally does. It operational insight based on data. That is agentic AI, and it's one of the most responsible ways of using agentic AI because the government used them as a consulting black box for decade. Like it's got the
Do you think
sample
that
approval already.
so are they just a glorified analyst?
That's agentic AI though.
Yeah, I know. That's what I'm asking. That's what it
No,
is.
I mean it's dumbing it down a bit, but I guess operating system. I like to say operating system better. It's like but it's
Yeah, it's like the
across
brain.
any industry. It's a brain. It's the AI brain. So I think that
Are they just
it's
like implementing LLMs for specific use cases, right? That's what it is. It's got
well,
to
it's
be.
just every organization is going to have LLMs as their engine. That's just how it's going to go going forward. It's literally going to be the basic input of just having a company
So,
going.
quick question though. Like something with like Claude and vibe coding, don't you think that's the bear case for Palantir?
No, because you still don't know what to do with that information that it doles out. Like you have to like have an expertise knowledge of like remember all these LLMs, all they do is recognize pattern and tell you that pattern recognition of like what the response you actually think you'd want. That's what and these consumer chatbots are. Like that's why it's like there's a mathematical equation. Like it's called this like I forgot what the phrase is, but it's just math that dictates what the responses are to your GPT queries. It's not really as much reasoning. It is reasoning now, but it wasn't initially. But that's kind of what these LLMs are. So like to answer your question, the logical is it's not going to because it's like these LLMs are telling you what ingredients you need to make this meal. Palantir cooks it for you. You still like there's a lot of error on like, oh, I overcooked the steak or I over seasoned this. Like it's not gonna taste the same, even though it told me all the ingredients. Palantir is gonna cook it for you like it's a master chef. Actually, I shouldn't say master because like it's not good steak and it's logical to steak stop. So like whatever logical's favorite steak spot is, it's literally gonna tell you cook it for you perfectly how you need it and enjoy the process, enjoy the meal. That's what Palantir does. However, these LLMs, all they tell you is the ingredients that you need to make the meal. Totally different. And hopefully that answers your question, but
I think,
that's
yeah,
kind of
I think it's funny because I think in some of the consulting companies like Accenture and other ones, like they've probably been getting hurt the hardest because of like Palantirs and
huge.
LLMs.
They're
Yeah.
old economy.
Why do you need
Like
them
that's the
anymore?
issue.
Yeah,
And you
exactly.
can't
So,
they can't partner with Palantir because it's also admitting like, all right, your Netflix were Blockbuster, so we're just gonna
and it's funny
hopefully.
because like I mean, that's basically what the Palantir bull case is. It's like, okay, well, it's just going to replace all of this like legacy consulting essentially.
So the issue with if I had to pick an issue with Palantir, I don't know if tech companies will adopt it as much as the old world industries. Like
Right.
that's the issue. So like I think that's totally fine. Like I think there's so much of this world that needs to get disrupted by AI in a good way, like healthcare, industrials, all that stuff. Like there's so much. The TAM is massive. I just don't. I just don't know if SMBs or like the mom and pops or I don't know, like the vibe coding, like you mentioned, like you can have 10 SMBs if you wanted now with all the AI tools, the productivity tools. Like you can create so many different companies. Like I don't know if they'll be able to afford the Palantir offering. Only these bloated legacy companies who like they need margin expansion. They need to like start to figure out how to operate in the new economy, the digital economy. They're going to be like just giving all the cash they can for Palantir. Like it's just like they see the ROIC in investing in Palantir, and they're just like they think it's voodoo magic. So that was like the last 2 years was like proving like it's not voodoo magic. So now that's what I made a post about yesterday. I think 2026 will be the year where they don't blindly trust it, but they let it dictate what they want. Like they trust it so much to the point where they let it run now. And so like pressuring it, seeing if it makes sense. ROI is good on it. Now it's like, all right, you proved the past 2 years. We believe in the agentic AI. It's AI. We need to continue this momentum. We're going to do what you do, what you're pitching. That's why I think AI agents, like, that's a massive, massive talent for Palantir. Like, it's just like another, like, I think, what's the numbers? Palantir is trading. I hate the multiple because nobody knows the ceiling on AI. Like, it's really stupid to say something's overvalued when you don't even know what the market is yet for it, because you just saw TSM, like they just destroyed earnings, like just handily. And just TSM is supposedly a heavily tracked company, and it's semiconductors. Like you can really calculate what the estimates will be. And TSM produces monthly reports every month too. It's like it shouldn't have surprised everyone to the extent it did, but it did. Palantir, they were supposed to finish the year growing at 54%, $4.4 billion. They're supposed to grow next year to $6.3 billion. I think, and that's growing at a 42% clip. I think there's a real case for $7 billion from what I'm hearing on how many people are embracing physical AI going forward, like applying AI to the real world, as well as agentic AI, as well as the commercial business continues their momentum, sequential increases every quarter. Like there's no reason why this can't just continue this momentum of being the top estimates by 10%. Like I really think that this is a name that it can grow 50% next year potentially, and this could be a 40% CAGR. Like I remember, like what was the last summer? I think you and I was saying like I think this is going to be a 35 to 40% CAGR for the next 5 years on this name.
I remember you saying that, and I agreed with you. But then we did the math, and I thought that the current valuation has already accounted for that.
I think they're going to
That's the
produce.
issue.
I think they're going to produce $10 billion of free cash flow annually by 2030. Like that was my number always.
So that's 430 bill market cap. That's a 43 time multiple for 2030. That's high. Because what's the growth going to be at that point?
Super high. But
what's the growth going to be at that point?
Probably 35 to 40%. 30%, probably close to 30%. But at that point,
they have already but I'm just saying, like, that means you're not going to get returns for the next 4 years by that expectation.
There is a real possibility of that, but you're trying to factor a fair value, and now you can make the argument like, does this stock deserve any kind of fair value? When there's only going to be a handful of winners as the application layer.
Here's what I'll say: it'll be fun until the party stops, and then eventually valuations will come in again, and then you probably get I think what will happen is you'll probably get another opportunity in a Palantir to get long the stock in size, and it won't be at the lows that we've seen in the past, but this stock could probably get cut in half if we had a true bear market or whatever, and then you'd buy that, and then you get back to these prices by 2029, and that would be the stock goes nowhere for 4 years, a lot of volatility, but it basically grew into its valuation. I think I could see that. Yeah,
I could see
that happens all the time, right? It's not that crazy to think, right? I think people forget that Nvidia was down 35% last year. These things happen all the time,
And this is the difficult thing about being an investor. I sold all my risk in Palantir way early, in 60s and 70s. I got in under $10. I was like, I'm selling my risk and letting it ride out. So I don't care about valuation. I just care about moats. If to maintain the moat and thesis, I'm going to hold it. This stock, I'm looking right now. I got to go on the weekly chart because it's been so long. I'm trying to see the last time it traded below the 200-day moving average. Oh my God, is this true? It's 2022. They're on a 4-year run almost on never breaching the 200-day moving average.
Yeah, that's pretty crazy.
Some
of these charts do look pretty heavy, though. I'm not going to lie. Some of these charts look heavy. Don't they look heavy?
I'm worried about Palantir in the near term because they cannot clear that 50-day SMA. That's been a resistance for this name. But I just think that they're going to remind everyone this earnings cycle again. There's only one Palantir for the application layer of the AI economy. They're going to produce mind-boggling numbers. But again, there is, if you want to talk real technicals, that's you guys know I'm super bullish. I think this is going to be a massive winner. Who knows about the valuation? Very difficult. I haven't added in such a long time this name, but technically speaking, it's hovering around this 180 level. And that is where the 50-day SMA level is. And it's a little heavy, like what Logical is saying. So if there is a world where this cracks below it and there's some kind of AI cycle is fading, I don't know what. The 200-day moving average is 155. I can see that potentially being a magnet for this name if it doesn't clear this 180
I mean,
because it feels top heavy.
isn't it interesting though? Like this name was all the rage last year and the years before, right? In 25, 24, it was huge. It was up huge last couple of years. Nobody's really talking about it anymore. They've
It's
kind of
all
moved on,
it's because of
right?
space. They're like waiting for space. It's the space. Like, what's the next 10x? That's what everyone's asking. Like, Palantir was the 10x
Bro,
last year.
Rocket Lab is $91. What the hell is going on, dude?
Told you. I told
ASTS
you.
China, yeah, I mean you're right, definitely. And this year has started off with like the high beta speculative. And I'm not gonna say Rocket Lab is necessarily speculative, but I would say its valuation is in speculative territory for like in terms of like future growth. Um,
Well,
the you
I,
know,
I I think it's because of sovereign spend. I think there's a high floor on like these names because of the sovereign spend. Like Trump just talked about like last week, he might bump the defense budget 50% in 2027. I don't think
true,
that's going to happen. But
right?
the thought process of the incremental bump, where do you think that's going to go towards? It's going to go towards next gen defense in some angle. That's space. That's um, SMRs. That's electrification. There's so many like different the critical earths. There's just like critical materials, quantum. Like sovereign spend's going to carry quantum for probably 5+ years until they get even close to commercial. But I think that these hot themes you're seeing this year, they all have one thing in common: sovereign spend is a very high floor, and I think that when you have some concerns about the consumer spending, we have some concerns about enterprise software, concerns about valuation of big tech. I think that's kind of been a safe haven of like, it's inevitable. These themes are needed for this new AI economy. It has a high floor due to sovereign spend. That's where a lot of allocations trending towards. I don't know. What are your thoughts on that? Because like they all have a very similar theme of like next gen. They all feel very next gen theme, and it's not retail driving that. I really don't think it is.
So yeah, I mean, I generally agree with you. I mean, I don't need to agree with you. The market agrees with what you're saying. I mean, look at Kratos, dude. This thing is up so much, right? Like it, you know,
Is it? Why is it not? Why is the Stereo Labs not up? That's so annoying. Is Kratos up?
Kratos. What does Kratos and Asteria Labs have to do with each other? You mean Credo Technology? I'm saying
Oh yeah.
Kratos Defense.
Oh, Kratos Defense. Okay, my bad.
No, no, no. Yeah, no, I don't think Kratos is up today, but it did have quite a nice run recently. I like
Oh
Kratos. It's
no,
actually really dope.
Kratos is a KTOS. Everyone, that's what we're talking about.
Yeah, Katos is ridiculous. It's up literally
It's
another. It's just up every
aerospace
day.
and defense. Aerospace and defense. Like that's the theme of this year. Aerospace and defense. That's why I
Dude, it's
chose
up
two names.
59% year to date, dude. It's been 2 weeks. What the hell is going on, man?
You want to see something even more insane?
Oh
Look at
God, what?
ASTS's.
ASTS year to date. No, year to date. Oh wait, year to date, 22%. No, Katos is up more.
What?
Way
Oh,
more.
I have a different number in ASTS.
Oh, it could just be that
I have
I'm looking on
41%.
I'm looking at Google. So whatever
Oh,
Google
yeah. So
shows,
I have
that might have it.
41% for AST. I have 32% for Rocket Lab. I have a list right now of names because again,
Dude,
so
I
everyone,
think Kratos is still crushing it, to be honest.
it is. That's crazy.
You know what else? Bloom Energy has been absolutely
Makes
ridiculous,
sense
dude.
because they're the energy provider behind Oracle's data centers. Like that's like if you want the exposure to what Oracle's doing at Safe Haven, like that's Bloom Energy.
Dude, I looked at this thing at $80 and I'm like, 30 times gross profit. I don't know. And then it doubled. Like, what the hell is going on?
Well, it's
I
because it's tricky because those are like valuations of those kind of names is tricky because deals change the whole profile. Like Bloom Energy is gonna get a lot more deals this year, but
I get it, man. But I have a question for you. And maybe this year just ends up being the silliest year ever because I just saw IWM 280 calls come in and we just hit a new all-time high on IWM. Like, I'm not saying that this year can't get crazier. And now that I realize, because I think Bloomfield Energy and others are like some of these high flyers are actually like top holdings in IWM, that makes sense that IWM is propelling much higher this year. But I mean, maybe we just continue to the upside, right? Like maybe so like for example, Bloom Energy had a very big year in 25 and maybe 26 is going to be another huge year. Maybe it's going to be like how Palantir was in 24 and 25 is going to be like Bloom Energy 25, 26, maybe, right? And there's going to be a passing of the baton to these kind of next names. And so 26 could end up still being a very big year for a lot of these names. But I got to ask you, at some point, I mean, dude, these things are going up really fast. really quickly, like a lot. I mean, I just get a little. I can't imagine who is chasing Bloom Energy at 145, and then watch it's going to be 250 later this year probably. But it's just, but like again, the return profile of buying it at 80 a month ago versus at 145 now, that return to 250 is 60% versus 200%, right? So like the entry is going to matter is what I'm trying to say. And it's like, I'm just wondering what the forward IRR on a lot of these names look like now. Like, I don't know. It just feels like a tough call to chase these things at these prices. That's just my only thought.
So the reason it's tricky because this is all just playing on the constraint of what AI data centers are going to provide. Like that's literally, if you want to dumbify it of what is happening, data centers are hitting constraints. It's inevitable. Nobody knows when, but it's gonna hit its head against the wall. TSM just like raised their 4-year CAGR to 50 plus, like for the AI part of it, substantially. I think it was like a 20% bump from what estimates were, 15% bump. So I think you're seeing every 3 months again, it gets escalated, the TAM opportunity, and there's so few players in this arena. Like Bloom Energy is a great angle, but like so is EOS Energy. Like, look, did you see EOS this year? That's what I was trying to reference. Look at their chart; they're up 60% this year. That's like one of my favorite names for zinc for batteries. Like, it's going to be the year battery, especially for in my opinion, AI, but it's also the data center constraints. Like Navitas is doing really great for power. We have Air Test Systems is one of my favorite names in my growth portfolio as well, where they have a massive data center component. Like I talked to you about this as well, logical, that name. So I think you're seeing that constraints become in the spotlight so far this year. 2 weeks in, again, this is just us guessing what's going to be like for the next rest of the year. But for me, January is such an important month for me because it shows me where the funds are immediately going towards as what the bets are going to be for the hot themes of 2026. It's just like every manager has to start from scratch. They're using the bonuses or using their performance with the last year to put their chips into this basket because they see a near re-rating of that theme. So that's why for me, I'm like noticing that. I'm also noticing in CES. CES is a great tell of where things are heading, especially when Jensen uses that stage to tell you where things are heading. And for him, the whole theme of this keynote was he's pushing GPUs onto edge devices. Edge AI is going to be one of the best themes this year because all you have to do is look into what Jensen said and what the CES was all about was just bringing AI to the real world. It's not about AI is not going to be about just answering stupid questions of like, my tummy hurts right now. Like, what should I have in order to make myself feel better? It's going to be AI planning, reasoning, acting in the real world. Like that is what CES was all about. So you have to think about edge AI devices, like all these things is going to be a center of attention.
I wish I stuck to the Warby thing because they have that Google partnership. That thing's been flying because the
glasses.
Yeah, Warby is one of the biggest winners lately.
Well, you should talk about the name that you told me about.
I'm going to. I was going to bring that up next. Synaptics is the one that I've been long for about a month now. A month ago, I saw some options come in for June $85 calls. Here, let me see if I can just pull this chart up. I have so many things open. Hold on. 1 second. Let me do this. Share screen. No, there we go. So here's that's Warby. Hold on. Let me okay, there we go. So Synaptics, I mean, just looks extremely strong. I've been long this thing since like 70s. I mean, this just looked super beautiful. So, so basically, look, I'm not going to get into the specifics about all of their different technologies because they've actually made quite a few acquisitions in like the last 5 years. And they've like kind of rolled up all of these things into one thing, which is what they're really excelling in right now is that edge computing. So they designed the chips for that. They have a Google partnership. This company is really cheap. Synaptics is trading at like 15 times PE. That's GAAP PE. I think they have a little bit of debt on the balance sheet from their past acquisitions, but it's not a big deal. But I think the really interesting part of this story, I was listening to the Barclays investor presentation, and they mentioned how so their IoT revenue is $400 million of their $1 billion total revenue. So it's about 40% right now. It grew 73% in the last quarter. I was like, okay, that's interesting because that smaller segment, that growth is not going to be, showing up when people scan for businesses because the top line, is a $1 billion total revenue. You grow 70% on a $400 million revenue base. It's not going to show up as much, right? So, I thought that was interesting. People probably missing that. And then whenever management was talking at Barclays, they said, we expect the IoT business to grow 25 to 30% CAGR over the next 4 years. And that will get you to over a $1 billion revenue run rate, which means, basically it's going to become a majority of their revenue in the next few years. Mm-hmm. So I'm a math guy. I think it made sense from a thematic standpoint. And if you look at this chart, I mean, the chart looks great. So I love when charts do this thing and they look at this, the 21 EMA is the purple line. You could just see it was just basing perfectly. And I got long right here. And so, I actually wanted to add to the position. And then I remember one morning I woke up and this happened. I mean, the stock was up like, I don't know, 3 to 5%. The next day it was up like another, I don't know how much percent. And I was like, damn it, I never got my chance to add. I guess that's life. And I should have added anyway because the stock just went higher. But look at this thing on a monthly basis. I mean, you think that this thing is extended. It is not. This thing was $300 in 2021. I'm not expecting to go back to those prices, but I think that this could easily be $150 to $200 stock. My entire position is via June $80 calls. So those are up. Those have already tripled basically. I don't think it's necessarily too late in terms of getting shares. Now, I don't know if I want to pile into calls at this point, but you could see the upside is pretty good. And I wish the calls went out further. They don't, but the volatility on them is really low, the IV. So, I think it's a really good deal. And then, I mean, this is the annual chart. You kind of see, here's like this hump from way back when, January 2015, does this big, ignore this COVID time stuff, made a bunch of acquisitions, stock fell really hard. And then you can see this nice little wick in 2025, and then hopefully reversing higher from here. But if you look at like this was being resistance, now it's hopefully finding support around this level. And so, I think it made sense. This is one that I'm not going to trim a single contract. I'm happy I was long in time, but ultimately, like, I think it makes sense. Synaptics. I'm trying to think from IoT standpoint. Obviously there have been several other stocks that have done extremely well, but let's. I see we have a couple comments. Let's try to talk about them really quickly. Somebody asked, and you might have an opinion on this. Talk about Hood, potential slow start in 2026. The chart doesn't look that inspiring. It's clearly below this 50-day, which is resistance here, kind of resistance here, still resistance. I don't necessarily want to call it game over for this thing because I think that long term it's going to be one of the, probably one of the best holdings long term. But for it to have a consolidation year this year, not unfathomable. But to be fair, like, if crypto speculation picks back up, which if we look at Bitcoin, Bitcoin is definitely looking very strong, breaking out of this base. They do make a lot of money from options contracts and, crypto trading. So the spreads. And so if those things go, so if Bitcoin comes back and then retail speculation comes back, then, Robinhood could easily have another great year. But eventually, it's just a tough business to own when we go into a bear market. But still, I think it's going to be a long-term secular trend, but it's still going to be a very cyclical business. But just looking at Bitcoin looks really good here. If you look at Ethereum, it has the same exact look, trying to break out of this base. But I actually think Bitcoin looks a little bit better because you can see kind of these highs from the base, and it's definitely right above that. To get a proxy to Bitcoin, I actually bought some MSTR today. So there you go. Let's see if we get some high beta proxy here. I saw we filled the gap. I thought it looked good for an entry, as long as Bitcoin is able to hold up. And so far, the pullback has been very reasonable. I mean, look, you have some decent volume on the pullback today, but look at the bar, right? The bar it's still an inside day. So really nice constructive action on Bitcoin. I don't know. Do you have any other thoughts on Hood before we move on?
I mean, listen, I think Hood monetizes attention better than anyone else in the space. Like, I think they're doing everything you want them to be doing to graduate away from being a brokerage business. It takes time. 40 to 50% of their revenue is crypto transactions. So, like, in the near term, it's going to be exposed to the crypto markets, and their crypto markets were a bit cold this winter. So I think that if that wakes up in 2026, this is going to be off to the races, because near term, they're very exposed to crypto. Long term, they're going to graduate away from that. Like this, that's going to be a segment of their business, but it's not going to be the driver. As of right now, like when it's like almost half of your revenue, it's going to be a driver. Nothing, there's nothing you can do about that. And I think as predictive markets also scales up, like that is actually going to become a bigger and bigger driver of that revenue as well for Robinhood. But they're doing everything you want them to do. I think they had an insane run. And I think right now their driver is crypto related, and that's cooled off. But if it picks up, it's going to have a strong 2026.
Yeah, that's just about my thought too. And yeah, so I said I got long micro strategy. I mean, look at the volume that it's been picking up right here. If you look at the daily, this one day like gap down had, I think it was like the highest volume in a very, very long time. And then you have basically a very similar volume here. I feel like the bottom might be in for micro strategy. So yeah, I'm along with a small position. I like it as a Bitcoin crypto proxy. It's just a trade for me, obviously. But yeah. So, cool. Let's move on from that. We have another question here real quick. I actually do want your opinion on this. Thoughts on Netflix? I want you to go and then I can say what I think.
I mean, it depends on your time horizon is, in my opinion, because I think this like Warner Brothers thing is just, it's going to be a lengthy process. And what I mean by that is I don't think either Paramount or Netflix is going to go away anytime soon on saying like, I think Paramount's going to cry wolf while Netflix is going to end up winning the bid. And I think that if you want to talk long term, if your horizon's 3+ years out and you don't care about opportunity costs, I think Netflix is a great opportunity right now, because they are morphing from, again, a streaming company that a lot of people thought was going to become a commodity in the new digital economy, when they saw other competitors try to have a similar offering, and the economics were so poor because they didn't have the first mover advantage. It showed that, all right, Netflix has a real moat, especially in streaming. And now they're, with this Warner Brothers acquisition, I think it turns them into a core distribution and monetization layer for global attention and IP in a world where, like I just referenced in this call earlier from CES, like edge devices are going to be, AI and edge devices is going to be a massive, massive thing. And I think that you're going to see every screen become a programmable. Oh my God. What I'm trying to say is like every surface and every franchise is going to become some kind of software object, is what I'm trying to reference on that. So I think that Warner Brothers is going to create the IP library for Netflix, and it's going to create that inflection point in their business to graduate from becoming that a global attention winner, because they all of a sudden you already have a leading global distribution platform for video via Netflix, but now they're going to be absorbing one of the last greatest legacy IP vaults. So, and you combine that plus also a studio engine that can manufacture any franchise extension or on command, like Game of Thrones, Harry Potter. Oh my God, I'm probably blanking on so many of like the DC ones, but there's just so much IP library they can monetize that they all of a sudden become this this asset that can be sliced. It could be like localized. It can repackage into like who knows what. It can be repackaged into games. It can be repackaged into some kind of interactive experience. It can monetize across so many different licenses. Advertising is going to be a massive player in this. So I think that it creates this kind of software flywheel. So like, I think Netflix is very interesting. They're on my watch list, my fourth industrial revolution portfolio, but opportunity costs. I don't think this Paramount Netflix like fight is going to be over anytime soon. Like, I think if Netflix wins it, Paramount can see, wow, this could be a big issue for us going forward. Like, we might we'll survive, but we won't thrive. It's a not solvency thing. It's just like we can't compete with Netflix's economics, and I think that's why they're fighting so hard. And Larry Ellison is really good friends with Trump, and I just Larry Ellison's son is the one driving the Paramounts acquiring Warner Brothers, and that's a interesting angle. And like I'm not trying to get political, but like I know Netflix leans very heavy on the left, and I know that Trump knows that. So who knows when like you have an administration that wants one side of a negotiation to win, if that's going to actually happen or not. So it's tricky.
I appreciate that. I'm gonna take another side of this, which is I'm long Netflix. Which is not what I usually do. Anytime I've been seeing options volumes that are very interesting to me, I will take an unbiased long position. I will be like, I don't care. I'm following that flow. That seems a little too good to be true. I saw $19 million come in on the 110, 130 call spreads. So this thing is trading at 89 right now or something. So anytime I see something like of that magnitude, I'm almost always going to just take some on the trade. So, I have like a 3% position in that. But I didn't take the 110, 130s. I took the 100, 130s. So they're a little bit safer just because they're a little bit closer to the money. And if we look at this chart long term, you can see this 100-week. So the daily just looks horrible. It's in no man's land. But if you look at the green line, that's the 100-week moving average. Support, and then support here as well. And then you're just now right back to that. If it's going to bounce, it's going to be here. And then those calls are for August. So we'll see. That gets you like 2 or 3. That gets you 3 earnings. So we'll see what happens. I think in 3 earnings, they could turn it around. I think people forget that it's a cash machine. But we'll see. I mean, I'm just following flow on it. What I can say is anytime I see something that has a lot of flow, I go ahead and follow it. That worked out really well. I think I was on here like last time or the week before talking about how I saw $41 million of calls in FXI. That thing looks extremely bullish. My calls are up over 50% now. And, $41 million of flow, I'm following that. I don't even care. And so some people, it's so funny because, you'll lose the purple line, which is the 21 EMA. You'll be like, oh, support, broke through. And then, I recently started talking to some traders that use the 30 EMA, which is what I'm using here. And that seems to be working a lot of the time. So, I like that. China looks good. Obviously, Alibaba, I had a nice trade on that recently. So that's looking good. Let's look at the daily. So let's go back to FXI. And then, China looks great. It looks like it's setting up for the, to go higher. KWeb, again, it was down like 20 something percent from the highs. And it just looks like it's climbing higher. And if you keep seeing, strength in like Baba and such, again, KWeb was another one that had $20 million of call flow, and those are up quite nicely already. So I'm just saying, back to reverting back to the whole Netflix thing. If I ever see a lot of flow, I'm gonna probably follow it. That's just life. And then we're talking about EMs. I did something today that you might approve of. I said tax loss selling be damned. And I went long Jumia again today because I just saw it come back down. I felt so much FOMO here. I saw it come right back down. You can see the red volume is less than the green volume here. And it comes right down to retest these highs. If you look at the weekly, it's even more beautiful. So I'm bringing up Jumia because we talked China, which is EM. And so, it's small cap. We talked about this exactly last week. Came in for a perfect pullback. And I just decided to go long again. And so I left some room to be able to add. But yeah, I was in a tax loss period. I felt so bitter when it was running around me, and so I just said, screw it, man, I'm buying it. So it's right off that 6 EMA on the weekly. It looks so damn good. So anyways, one last comment. I think this was an early comment we got, and it's a bio that I've been long, which is ABVX. It was one of my largest positions. It is still my second largest position. Today's candle is absolutely disgusting. It is down it's down 7% on the day, but if you look at this candle, it's worse than it looks because it's actually up at 130. So it fell like 12% intraday, which is nuts. For commentary on this, it is going to be a buyout candidate. This candle looks very ugly. It is definitely high volume, bearish engulfing, not great. But you have to remember that this company has a lot of intrinsic value. I've been trading this thing since $10. So I've realized a lot of profits on the way trading around it. My current average is $97. That's in my IRA, my taxable shares. I was in and out a lot. I booked some losses towards the end of the year on some trading shares. But when I'm off of my tax loss period, which is next week, I probably will add, if we continue to stay, in the 110 area. I do think that this will end up getting bought out for like 200 plus. That seems to be the consensus. But I listened to the CEO at JP Morgan this week, and he basically said, hey, it's going to take time to get a deal done, like working with like the French government to get the deals approved, et cetera. Like all this stuff takes time. Formal offer comes in, then you have a few months of that. So I'm not really too concerned. ABVX is one that I'll just continue to sit in and just watch and just let it do its thing. And eventually it probably gets bought out. So, the CEO has sold companies before in the past. So I'm not really too concerned. Anyways, we are really right now at the top of the hour. Is there anything else you want to talk about or?
No, I mean, this was a great episode. I love doing it while the market's going. I mean, right now from my screener, it's been strong. I mean, it's been stuck in mud since the open, which is a good thing. It's holding strength. I think there's nothing to me that screams it's overvalued, running too hot. I think if you want to look on the RSI for the Qs, I mean, it's at 55 right now, and it's been consolidating for what it feels like 2 months now. Like it's just been consolidating, which is what you want to see. Like the move we've seen past like year, especially like right now, it feels like the market's just consolidating on the top. I think the next catalyst will be earnings reports. We'll see. I'm not worried about the chips anymore. I think semiconductors are going to do really well this year after seeing TSM commentary. I think there's going to be a divergence between which Max 7 names are going to do well this year. I think it's going to be some going to be too noisy. Some's not going to have any kind of margin expansion opportunity, and some's premium valuation. So like, why bother? I don't know if Mag 7 has to produce a really strong earnings report for us to like really take off this year. I think the breadth it's only been 2 weeks. I think it's going to continue the rest of the year. And this might just be a consolidation year in Mag 7 names, not Amazon or Meta, in my opinion. I think those two names will have a catch up into what the valuation should be. But everyone else, like, I mean, I have a hard time seeing like Microsoft really catching a bid. I think that they need some
Oh my
time.
God. I'm sorry. I just saw Meta's back at 622. Holy moly, dude. What the heck? I had no clue.
They don't believe They don't believe Zuck on investing responsibly. They think that it's just he's going to throw money at the fire and like hope he solves AGI, and who
I
knows how
mean,
long that's going to take. I think he's changed. I think 2022 was when you really saw him like, all right, he does factor in shareholders once it gets to certain points. I think Meta, when you own 3 of the top 6 apps in the world, nobody can disrupt that. Doesn't matter what LLM, doesn't matter what agentic AI, doesn't matter what, like in the AI economy, distribution is a massive moat, especially with eyeballs. They're going to be able to monetize. They're going to bake AI into their ecosystem at such a rapid pace that it's one of those names where like, fine, it might look ugly now, but like there might be like a quarter sometime next 6 months of just like, what did they just report? Like that's while they're burning this much money and not burning because I like their spending, investing this much in capex for AI. How is that possible? I think it's, I don't want to say it's that easy. I just think that distribution, people misunderstand how quickly you can bake AI into an existing ecosystem. Or that is a flywheel. Like the more people you use it, provides you better data, which that data then provides a better model for you, which then provides a better experience for the user, and they keep returning. That's the flywheel. That's why distribution is so important, and that's going to continue in the AI economy. And nobody has better intent buyer behavior than Amazon, combined the logistics mode with robotics, expanding their margins in their low margin businesses. Literally, Meta's going to probably have Meta Cloud sometime in the future because the amount of compute they're acquiring. And you just don't know what they're going to become because they just had that acquisition spree like 6 months ago, that free agency. Like it's going to take some time for them to really produce results after that splurge, but they have the ecosystem to be able to flip that switch. So I think I'm confident in that, but I don't know where I was going with this. I turned to another rant, but I just think that nothing's breaking. I think the only issue is maybe geopolitical if things escalate with Iran. But even then, like I think the VIX, when things got the worst, like bad, VIX was still in the teens, like this past week. I think it's just
I don't
AI
think
is a story.
I don't think the Iran thing is going to be that big a deal. I mean, they're not really like. I think China is the only other country that matters. Falling out with China is the only thing that matters. So I think besides that, I'm not really too considered.
But even then, like,
concerned.
I think people over exaggerate when they invite, like, if they invade Taiwan, for example. Like, I think people over exaggerate the how bad that would be. Like, I think people like, oh, it's gonna like we're gonna like.
Well, if they lock down TSM's exports and then like you can't have a refrigerator or a car anymore because they make 50% of the chips on Earth.
That's not the case. That what's going to be. Everything's just going to go towards the U.S. foundries. They're going to fill that system with the talent
That
from
takes time though,
TSM.
right?
No, but we're just going to be. Where was AI 4 years ago? Three years ago.
Yeah,
It was
but
it was
one is like
elementary.
sure, but like one is a physical thing that takes time to actually set up the factories. Like some of these places just broke ground. It's going to take them 2-3 years to build.
Oh yeah, I agree,
factories.
but I just think it pauses the world for 2 or 3 years, and like
That's a
long
big
term.
deal. That
No,
dude, that would
it's a
crash the
big deal.
market.
But people are saying it would 50% correction in the market if
I think it would be.
if Taiwan gets invaded. I don't think it would be that much
I mean,
because
it would be a crash. It would be a crash. I think so. But if this can prolong for like 2 years and then it's like our factories are up, then it's like that risk is forever off the table. So I think we're getting closer and closer to this being no longer a risk in the markets.
I think that's a good topic for next week's conversation because I think that right now the top line growth for a lot of these Max 7 names would not get impacted right now really as much as you think from using a latest and greatest Blackwell chips to Hopper 3 years ago with a US foundry. Like I just don't think it would be that much of a difference, but
Yeah, it could be. Yeah,
it's a hypothetical
it's
game.
fair take. It's a fair take.
Yeah.
It's a fair take. Yeah, let's hope for nothing bad. Anyways, any final thoughts after that?
Earnings season's next week. Is there any
Oh,
major ones? I forgot because TSM's usually the beginning of. We
I'm
have
assuming
Monday
Max
off. I'm pretty
7.
sure we have Monday off, by the way.
Yeah, we do. Yeah, MLK.
So let me see next week real quick.
Mhm.
We have Netflix on Tuesday. Interesting. So
Shit. How
you
much
should
worse
know
could it be,
that.
dude? How much worse could it be than $88 a share? I guess we're gonna find out.
I mean, it's not cheap. It's fairly valued. That's the issue with that one. All right. So we
Yeah.
have Netflix on Tuesday. We have
Can
Intel
can
on
I make the
Thursday.
argument that I've heard from people though about Netflix? It's not a consumer discretionary. It's a staple. So when you think about
It's
it
not,
from like, yeah, go on.
but you
What
also
were
have to factor in. I worked in the entertainment space. There's a negative for working for Netflix. It's sellouts. So I think
Oh,
there's like the highly talented, like
who cares
not
about
just
who
like
works there? Who
no
cares who works
the
there?
actors and directors, like all the talent that actually make good IP, new ones. They don't want to work at Netflix.
Dude,
I know that for a fact.
I have canceled Hulu 3 times. I've canceled HBO
No,
twice. I've
no,
canceled
I'm saying
Apple. I will never
I'm saying
cancel Netflix.
not from the consumer. I'm just saying like it
Well, that's
does
all I
provide
care
an
about.
opening. I'm just saying it provides an opening. But all right, so we have
I hear you.
Netflix.
Yeah.
We have Intel on Thursday, which is they've been one of the best stocks this year.
Yeah, true.
I'm trying to see what is it just Netflix and
Is there no
Intel and
other mega cap?
Intuitive Surgical already pre-announced. That's gonna be a nothing burger.
True, true. You know,
Yeah,
did
I guess
PRCT
not.
did PRCT pre-announce? Because they're
I don't
kind
know.
of part of that JP Morgan. You
They're
cut
gonna
in?
they're gonna get acquired this. It's just a name that won't.
Did
I
you
think
see?
they're
Did you see
they're
Penumbra
fine.
Did you see Penumbra got bought by Boston Scientific today?
No, I didn't say that. Didn't they
So that's
buy?
another med
They
device.
bought Shockwave, didn't they?
No, that's J&J. And I forgot who bought
Oh,
Inari last year. So all these like mid cap med tech companies are all getting bought out. I wouldn't be surprised if PRCT gets bought out. I am currently in a tax loss period on that one as well. I will definitely take like a small position in it when the time comes.
Trump cuts tariffs on Taiwan at 15%. Just announced.
So we're going to the moon, boys. That's a great
Oh
way
my
to end
god.
it. That's
Yeah. All right.
fantastic.
Well, tune in next week, guys.
Yeah, seriously. All right. Yeah, nothing from me. Let's go to the moon. IWM new all-time highs. All right. See y'all. Cheers.